The Fed's on CNBC. Let me go to CNBC. Let's see what the Feds are saying. Is it Bauman? Who's talking right now? What Fed president is talking? Goolsby. We got Goolsby on a Friday. Oh my, Goolsby on a Friday. What could be better than this? Here we go. Let's listen to Goolsby and see what he's got to say about PCE that came in at 2.8%, which was in line with expectations here today.
Don't make too much of any 1 month, but I've been saying that I felt like we are on path to 2%. I have comfort. I won't say overconfidence, but I have comfort that we're on that path, that if you break out the components of inflation, we finally started seeing sustained progress on housing inflation. We got services coming back to somewhere around where they were pre-COVID. And on goods, we had a long-standing trend before COVID ever happened of actually mild deflation on goods. That's the part that's been a little overly firm in a couple of months. I think on net, that's going the right way. Now you add on top of it, we got this policy uncertainties that might affect prices. I'm fine with rates coming down, commensurate with inflation coming down. I always said, a year ago, I was saying we're entering a phase where neutral is well below where we are, hundreds of basis points. We cut 100 basis points off the rate, and now let's slow down to feel our way to what is neutral, and the uncertainty, it kind of adds to that feeling.
Austin, I want to
Goolsby's being dovish. If you can't tell, he's being very dovish. He's even downplaying the tariff talk and basically saying, hey, maybe that's going to affect prices, but overall, we do feel inflation's coming down. And he's also talking about when you segment inflation, there are certain segments that are going down. We're seeing it in this PCE report, which means if inflation's on its ways down, the Fed is doing the job that they are meant to do, which is get inflation back to 2%. And that could lead us to get more rate cuts towards the end of the year.
dig in a little bit more. What did you see that you said was better than expected? It looks like this super core has been pretty good. I looked at the 3 and the 6 month. They look like they're coming down. But are you still focused on the year over year at 2.8 and stalling there as what's guiding your policy thinking?
Well, no, not mine. I've been critical of, I shouldn't say critical. I'm skeptical of just looking at the 12-month number when we know that at the first quarter of last year, there was a big bump up. We have been making progress. The fact that if we keep getting numbers like what we just saw, the 12-month number is going to start plunging dramatically as we go into this first quarter. That's not a sign that inflation is falling. That's just a figment of how the thing is added up for 12 months. I mean, the 3-month and the 6-month numbers have been coming in pretty solidly. And just this month, the expectation was 0.18% for the month, and it was a tad below that. Mostly it's just what was expected. And that's multiple months of solid performance coming in right around the 2% target. That's what we want.
So last time you were on, you were telling us that you think that rates a year from now will be significantly lower. I think I have that right.
Yeah, I said 12 to 18 months. I still think that.
Are you still in that zone? And is that despite, irrespective, irregardless of what happens with tariffs and fiscal policy, or is that you're just making policy based on the inflation numbers and your outlook that does or doesn't include a fiscal policy change?
Yes and no. You know, a little of both on that. I think the predicate, the thing that is required for us to be able to get down to what I think and what still the SEP says is a neutral settling rate that is well below where we are today, is that we've got to be totally sure that inflation is on this 2% path. It's been going well. We're still making progress. We've made a whole lot of progress. The job market, to me, looks like it's settled in around full employment equilibrium. And now we've got a lot of policy uncertainty that we do have. If it affects prices, it affects us. I'm not weighing in on what fiscal policy the Congress and the president are going to choose to make. Our signal is getting a little muddied when things are happening that are driving up prices. Now, on a purely theoretical basis, if it were a one-time increase in tariffs that increased cost, but there was no retaliation and it wasn't lasting, that's supposed to, in theory, be a transitory increase in the inflation rate. And so it's not obvious that monetary policy should react to it. But the difficulty we're going to have here in this near period is if collectively policy is going to be raising prices, we're going to have to figure out which part of the inflation is the part that monetary policy should look through and which part is a sign of the economy. But as I say, separate from that, just the underlying part of the economy to me looks like it's on an excellent path. And this is yet another indicator that our inflation, our fight to get back to a 2% inflation, we're still making progress on that.
So, hi, President Goolsbee, it's Sarah. Are you in for a March cut or not? Because I went into the Fed meeting wondering about a March cut, and I didn't really get a good signal from Fed Chair Powell. I know you've got still 2 CPIs and 2 unemployments until then, but is it your leaning that you'll be cutting again in March at the next meeting?
As you know, and I appreciate that you added that part, I don't like tying our hands when we got a lot of important data still coming through. We're trying to figure out this issue of the, let's call it the seasonality point, that in the first quarter of many of both last year and some of the years before, there was an uptick in inflation, and we're trying to figure out, is that because seasonal adjustment? I have no problem slowing our pace of cutting, feeling our way to where neutral is as we get closer to neutral. That we already cut 100 basis points, I think is a good start, and now we're closer. So I believe the words that Chair Powell used were we weren't in a rush to get it to neutral, and I understand and I kind of agree with that sentiment. Let's see how this goes.
Yeah.
Right now, probabilities for a rate cut in March are 18%. So not the highest, but definitely not like less than 5%. We're going to let Goolsbee finish. Price action across the street, getting a little bit of some red candles here. Not every stock is able to hold some of the 52-week highs or even all-time highs that they were at about 20 minutes ago. But Palantir is still holding 84. Karp's going to be speaking in about 45 minutes. And so we'll hear from him pretty soon.
Yeah, well, then that also raises the question is what is neutral? And I know we always ask that, and there's no real way of telling, and it doesn't sound like there's a consensus on the committee. Is there about what that destination is?
Yeah, not a total consensus. You can see if you look at the dot plot that there is some disagreement, but the broad mass is still a fair bit below where we are today. So that's why I say if you feel like we're continuing on this path of inflation coming down to 2%, then to me, that opens a door for rates to be a fair bit lower than they are today once we're 12, 18 months in the future.
Austin, there was a time when, before you were a big muckety muck, when we could sit around and talk about fabulously interesting economic ideas. And you're not in that position anymore, but let me appeal to that time. President Trump has talked about the idea.
You're saying my ideas aren't fabulous, Steve?
No, they're fabulous. It's just that you were more limited in what you can talk about. President Trump has this idea of buying and creating a Bitcoin reserve. As far as I can tell, my knowledge of the U.S. government administration is that if it does that, those reserves will lie on the books of the central bank, the Federal Reserve. Now, Christine Lagarde yesterday was asked about this, and she said, I think there's a view around the table, that is the ECB table, that reserves have to be liquid, that reserves have to be secure, they have to be safe, that they should not be plagued by the suspicion of money laundering or other criminal activities. What would your opinion be of putting reserves of Bitcoin on the book of the central bank?
I don't know. Look, I'm not a lawyer, but I think what we the Federal Reserve System puts on the balance sheet is highly legally restricted, what the Fed is allowed to hold. And you've seen the FOMC.
The Fed should put Bitcoin on the balance sheet. That would make things really fun.
Has made the statement that on the balance sheet, we're trying to get to 100% treasuries. Investing in anything, we mostly just follow the law of what's allowed. Okay.
Let me just follow up with one last question on the issue of inflation. And where do you think it goes from here? What kind of progress do you feel like you're going to be able to make over what period of time? And I heard you answer Sarah's question about March, but the market's priced, if you look at the probabilities for a June rate cut, possibly a second one by December. Is the market in line with your thinking, President Goolsbee?
So you got two different questions there. One is about rates and one is about inflation. Where do I see inflation headed? Back to 2%. That's where I see inflation headed. If we keep getting numbers, we've gotten a couple of months of numbers that are at or below 2%. If you look at our 6 month, 8 months of inflation, we're coming right in around 2%, maybe slightly above 2.25. So I think we're getting to that. And if you look at inflation expectations, longer run expectations, they remain firmly anchored that the market believes we're going to be getting to 2%. So that's where I think we are. Now, as I say, Sarah highlighted, there's not total consensus on exactly where neutral is. And so as we're getting closer with the rates, I do think it makes sense to kind of slow down. There's a lag to monetary policy. So let's feel our way to what really is neutral. We don't want to re-overheat and we don't want to slow down. And there's a question mark that's coming from the policy uncertainties. Sarah highlighted the consumer impacts of tariffs. Right. As you know, out here, the Chicago district's the heart of the Midwest. We're like Saudi Arabia of the auto industry. When I'm talking to senior auto executives, they're very concerned about what tariffs might do to their prices or to their profit margins. And we do have to work these through to before we can express confidence on where we are on the underlying economy, I think.
Austin, thank you very much for joining.
There you go. Goolsbee, as Austin mentions in the chat, he did say that Congress has to determine what the correct laws are in regards to what the Fed can put on their balance sheet. This is the most crypto-friendly administration ever. I don't know if Congress is as crypto-friendly as Trump, but if Congress were to make it a law that it is legal to put digital assets on the balance sheet of the United States, instead of having U.S. treasuries filling up the balance sheet, which is U.S. debt, theoretically, when we're doing some quantitative easing, you could imagine that the Fed put some Bitcoin on the balance sheet. Now, will that ever happen? I think it's a little bit of a long shot, but if it does happen, it's sort of congruent with this idea of the Bitcoin strategic reserve. You would definitely have Bitcoin catch a bid. And theoretically, if you've got the United States buying Bitcoin on their balance sheet and the Fed's putting it on the balance sheet, you're going to have a lot of other central banks across the world, Canada, the United Kingdom, they're all going to follow the US. And that's where Bitcoin's price appreciation honestly could be substantial. And, you know, that's the sort of Bitcoin maxi thesis that can help us get out of our debt if Bitcoin gets to like $1 million a coin, because we could pay off the debt 100 years from now by having an asset that is actually finite and there's only 21 million of them. That's sort of the utopia goal around Bitcoin, but it's just gonna be a question if the Fed can actually do that. Nonetheless, that was super bullish and dovish from Goolsbee. I liked what he had to say. He kept the 2% inflation target on point. He didn't say we have to get to 2% inflation to cut rates though. And that's also what Jay Powell said. Jay Powell said we don't have to wait till we get rates going to 2% in order to, or inflation going to 2% in order to cut rates. We just need to feel confident that inflation's headed on a downward trajectory in order to cut rates, which is as dovish as you can possibly ask for. So as you can see right here, the S&P 500 almost getting to all-time highs. He didn't say anything that was necessarily hawkish. He's been pretty dovish for all of January. And it looks like if inflation continues to fall in the right trajectory, the Fed's going to cut rates. Maybe it's in May, maybe it's in June, but Bank of America 3 weeks ago putting out a note to their clients saying it's not going to happen in 2024. I don't think they're going to be right on that. I think we will get rate cuts inevitably. I don't think it'll be March. I think March is too early. I think March is a little bit too early. I think we would have to see substantial declines in inflation next month for it to be March. But I think May is not as crazy as people think for us to get it.